All right, folks, welcome to the long-awaited trade recap that we took on EUSD that we lively executed on the live stream. This one was in a 4.5 RR win. This one says 4.8. It was 4.5 because I didn't really bottom tick this move. I got out somewhere around between this candle. Right, so I barely bottom ticked it, but I made around that. So I basically bottom ticked it. Not really, but somewhat. And this trade, a beautiful trade in my eyes, beautiful shorting. It panned out. We actually made money on this, but sad news we're going to talk about. Um, this one pretty cool. We followed all the rule. We went for our goal, which was overall this candle low, but I got out here due to some reasoning that I'll tell you guys, and it didn't pan out at all. The reason it didn't pan out because of the fucking which we're gonna talk about in this video. Some profit rules got violated, and I was like, damn. So it's cool, interesting. New lesson, right? But yeah, let's get straight into the long-awaited trade recap, folks. We took on Monday. This was given, live on the, on the Discord and on the YouTube live stream, right? Which is beautiful. I know multiple guys took it. I don't know how somebody got out of this shit at a break even. I don't know how. After you're up this much, we literally top wicked it, but I do not know how you guys didn't profit out of this. You were up 4.5 R. You gotta somewhat get out of that trade here. You gotta partial or break even or get some sort of money. Yeah, you go straight into this video. There's a big lesson. This right here changed my whole dynamic of my trading here, which going forward is gonna be real different. It's gonna be real different, which we're gonna talk about. But let's give you a top-down answer to this specific trade. My top-down process of what I'm looking. This is I'm gonna go to a overall and a bar replay here just to show you guys here. But on the weekly time frame, we had a weekly IRL to ARL. At that time, weekly CRT high got to the weekly low as well as a weekly fair value gap. So do I really care about that? Not at all, because that one is going against the actual order flow, which is actually bullish to go to the upside here. It's weekly IRL to ARL and weekly to the upside. This one right here is very short term, right? As I could say. Now the lower time frame, the short term liquidity was bearish. We compared to the short term liquidity, the long term liquidity, as you guys know, because our trades last couple of hours or probably a day, very short term. So we paired the short term of the long term. And drawn liquidity wise. So the short term liquidity was bearish. We had a premium ERL discounted the IRL, this fair value gap right over here, as well as we had when the premiums want to sell, we had a daily to downside. We had SMT with these highs, and we're not SMT. So we had a lot of things here to the downside. That was literally enough. And we're selling above the weekly opening price. Now on the lower time frame, the 4-hour time frame, we had a 4-hour range high, range low. Range high got signal down with range low. As we had a daily range here, we had a daily range SMT. So this daily range high was protected right over there. So the range high, we're in the premium region as well. So I want to go down to the discount region or go down to the range low. Do I believe wanted to go down here? No, that's why I have my take profit down here. But I sooner or later realized, okay, I would no longer go for a, take profits that are, all down here. I'll be going for a fixed RR, which we talk about in this video. Now you can see we had all this context. We're looking for a negative profile, one on accumulation, 5 mid position and expansion. We had all of these concepts and everything like that. Now if you go to lower time frame to execute this trade, my thought process during this trade was, okay, the 1 a.m. high wasn't a legit high, so I was looking for the 5 a.m. to purchase the high, make a legit high, and purchase that out by the 6 a.m. and get the right time to purchase as well. So the 5 a.m. didn't have a legit high here, 4:45 a.m. So I'm looking for this high to get purged. I'm looking for a legit high to get formed. I'm looking for the legit high to get repurged. Legit high got repurged. Now I'm looking for the right timing of the purge, which happened between 6 a.m. So I was like, okay, we got the right time to purge. Now all I'm looking for is a Monroe 1, which is the order block. So this bullish candle that dug above these highs. So after that, all I'm looking for is a model 1 confirmation, which that one that I confirmed it. This one right here confirmed the model 1 confirmation. Now at first I was looking to enter a threshold right over here. My not threshold. I was looking to enter another resistance block as my initial entry, but market didn't pulse to the downside, so it didn't make sense to go back up all the thresholds since the market maker is losing too much money, pushing it back up all to the upside. So they need to go tap the order block, accumulate just enough order to push down and not too much because they lose too much positioning there. So they are gonna push price back up to the model 1, then go lower, right? So when I see this push to the downside during that time, because this candle at this time right here doesn't look like it doesn't in your eyes, in your POV, it doesn't look like it's not big of a candle. But if it gets this is it's not big of a candle at all, you know what I see right here. But just keep in mind, this was during that price time, because when the market is actually moving, when actually like an actual live data, when you see a 1 minute candle, see it go a little higher, you think that candle is big, but once the market goes, you look back at that candle is small as fuck. So it's just like a small little market manipulation they do. They just to fuck around with your head, right? They make you, because when you zoom so much into the market, the candle looks big in your eyes sometimes for no reason, right? It looks small for some reason, sometimes for no reason, right? So in my eyes, at that time, market didn't push it to the downside, so I changed my entry to the model 1 itself, because if the market didn't push it to the upside, if it's gonna go back all the threshold, to the resistance block, they would lose too much money on the resistance block, because it wouldn't make sense to do, because since the market didn't push it to the downside, it wouldn't make sense for them to retrace all the way back up to the resistance block and move lower, because it was too much positioning and it doesn't make sense. So since we're not gonna do that, we're going to change our entry to model 1, but we're gonna change our stop loss. Our stop loss is supposed to be the resistance block, but the candle was so small that that stop loss was very unrealistic here. I was like, okay, that stop loss was very unrealistic. I want to have some sort of a safe stop loss, because the resistance block was kind of, the order block is kind of small. The resistance block didn't even get tagged, by the way, so then eventually went lower. Now if you go play a little bit, as you can see, the resistance block got tapped and went lower. The model 1. My stop loss was supposed to be down here, but this is how you gotta go based on your feelings and your logical reasoning. This is two type of stop loss. So I put my stop loss initially on the threshold, but I knew, okay, so if it's gonna tap the threshold resistance block, sometimes it may tap the threshold. So then you put my stop loss above this high. This high has, it's right above the threshold of the resistance block. So I was gonna be putting over here is gonna be kind of fine to be for me to stop loss, and is a very good stop loss to put it as, right? So it's not that risky, nor is it not that rewarding. It's in moderate, right? So entry got hit, went into the trade, instantly no drawdown, ticked it, top ticked it on the move, stop loss right over here, and eventually we rode that wave to the downside, and eventually could play over here the market. As you can see, eventually we're waiting till this market, I'm waiting for the market to play out here. I let it play out. And eventually at around 5 p.m. I went out to the gym. I came back at 8 p.m. So at 8 p.m. right over here, this was 8 p.m. happened. Right over here, I was at the gym. I came back in the market. I was like, okay, it's 8 p.m. I was like, okay, let me get out of trade. I'm gonna get out of trade right over here. I got a trade like at 8:30. Right when I got out of trade, I was like, okay, I'm good for the day. I literally got a drawdown. This was a 4.5 RR. 4.5 RR times 2 is what? 9 RR. I literally got out of drawdown. I was up 3%. Because I was drawing for 8%. I was up actually 3% from the drawdown. I think not 3%, but I don't know my maths, right? Somewhere around 1 to 3%, somewhere there in positive. But when that happened, what happened was that since we entered, we ticked our entry, we had no drawdown, but they said I risked too much. I don't know how, because I was down 8%, so I was like down my last 2%. So if I'm down last 2%, I risked the last 2%. So I got a drawdown with that. I took a screenshot, but unfortunately they didn't let me take a screenshot because they came a text after long after it happened. Long after I took the trade, I sent me a text at 3 a.m. I'm like, what the fuck? You late, buddy? So I checked it out, and eventually, they said, okay, I violated a rule. Am I sad about the rule? No, not at all. I'm actually happy here because I had no psychology problem here. Even with the loss, I was like, okay, I just trade want to win. It was not my problem. It was a broker problem. The broker, I don't know, they just I broke a rule, which they said I risked too much, and I broke that threshold rule, which I don't know how I broke the threshold rule and I made money, but I somehow did. Broke the threshold rule, which is fantastic. Cool. I was up 6,000 in floating profits. Got out at I think around 5,800. I was, as I said, I was risking 2%. Got out a trade at 4.5 RR, and what I'm wondering, will take profit number got met? So this overall is a loss. So what do you mean by that? The reason I got out here is because I found out sooner or later that I had so much rules, or just on partialing and just on breaking even, just on having greedy problem and breaking me too early. I had those problems and so many complicated rules around that, and eventually I checked Romeo. He said you gotta go for a fixed 3RR always. Everything owes me 3RR. Order blocks owes me 3RR. Every trade I take owes me 3RR. A 4R order block owes me 3RR. Everything I take must and owes me a 3RR. So in this case, I made 4.8 RR. I was like, okay, this is giving me way more than I need. I'm gonna get out of trade because I was actually studying Romeo tweets back in 2023. I was studying some of his tweets. The reason he says to do that is because this is actually consistent. This is stable, and I don't have a win rate of a 30%. If you have a 30% win rate, and you have I have a 30. Actually, I think I have around a 30% win rate. I don't know how much win rate I have. But if I have 30% win rate, I should do know how much win rate I have. It's like around like 37% or 40%, somewhere around there. Since I have 30% win rate, if I'm going for a 3R fixed 3RR, I'm gonna be profitable after 10 trades. It's gonna be up 2RR or above. Don't matter, as long as we're making 6% a month. That's all that matters. And the reason I did this is because the reason I got out the trade and why I'm going for a fixed 3RR from now on this is where the lesson comes here. And we didn't break no rule. We built good habits. I'm satisfied. When I win, I feel nothing. When I lose, I feel nothing. When I'm wrong, I feel nothing. When I'm right, I feel nothing personal, strictly business. I set the risks, especially lose, especially on the long term. I'm cold, calm, the losing streak on winning streak. I literally got a drawdown with this one, but they somehow I said I broke a rule. So they breached my account. And other than that is, a winning trade does not excite me. A losing trade does not faze me. Winning the trade does not concern me. I just followed my rules, got out. I was like, okay, my new rule says to get out. I'm gonna get out because now this is where the lesson comes here, right? So now the reason why I'm going for a fixed 3RR, I have a 30% win rate, so I'm going for a 3RR. I'm gonna be a net positive in the longer term, and it's actually consistent. How come it's consistent? Because every trade I take offers me a 3RR, and the reason why I'm going here, there's multiple reasons why I am choosing just to go for a fixed 3RR and nothing else. Not going for the take profit over here or whatever. The reason I'm doing that, which I'm gonna talk about right now, is first I had too much rules on break evening, partialing, and partials fuck up your setups. Partials, I made a 15.5 RR. Guess how much money I made from that shit? A 9 RR gain. Right? But you could have made a 3 RR gain on that. I mean, if you would have do that, you would have made 3 RR. But guess what? I could have wrote the weight up to it. What I could have done is, right? So let's just say I'm going 15 RR overall. I have a set of the first TP. Let's just say fixed RR, 3 RR. We'll go for a 3 RR gain here. Let's just take profit. This is the market. We're right over here. We enter a trade to our long side. Right? We're in the trade with longs. And eventually our target goes over here. So our target is over there. We go for a 3RR, market goes up. Okay, we made profit out of the trade. So now since the market has a long way to go here, what we could do is potentially wait for another macro. We could wait. So let's just say the same day here. Wait till the Venom model. The Venom model occurs around 1:30 p.m. So 1:30 p.m. comes around, Venom model gets it, go right back up. And eventually we make another 3RR, right? And this is for this model, I'm currently back just to give you more. I'm taking on a taking it on a live account as well. That I'm backtesting it. So if I do backtesting like live account, which makes me make me focus more on it, is the model is called the Venom model. There's a actually called model called Venom model, but it's nothing like that. It's way different, right? Mine's way different than what I'm just branding. So that's all it is. So guess what? We just make another 3RR over here, another 3RR over here. Instead, right? If it goes over here, it gets us KOD here. We make another 3RR to the upside. Boom. And eventually we just made a 9RR here all the way combined. But you can see, but wondering, well, shit, because just made a 15RR here. But guess what? With the 15RR, I am losing a lot. I'm partialing. I partial here. Let's just say I partial the 50% mark. A partial. I lose a lot of money. Now I have less percent running, which makes me less overall. Now this messes up my RR, and it's not consistent. By the way, keep that in mind. It's not consistent. The reason it's not consistent, I go for a 3RR setup, and I have a 1.5 RR partial. And eventually, I making less than I was supposed to be making because I have a 30% win rate. I must go for a 3RR, minimum per trade. So to make it, so that means, okay, if I keep on doing it over long term, I'm gonna lose. And what else could happen if you're going for 15RR is you enter the trade, you're up. What market could do? Fuck around with you, go back lower. So now you're here, entered here, entry is all the way down here, right? Your entry is all the way down here. This position, you're up like 5+ RR. Guess what? The market goes back lower, stops you out. Which happened to this trade right over here. You can see market would have just stopped you out right now. And you can see even during London session, market never stopped me out here. Never stopped me out. It went right back lower. But you can see you were overall getting cooked right over here. This is where the market is currently. But guess what? My stop loss just got hit. And this stop loss is the actual stop loss supposed to put. And you can see what's happening. So we have a range here, quick little representation. We're trying to short it down. Since we're going for a 3RR, I could have gotten out here, but I've shorted it back down from this in London session. Go for another 3RR, and eventually near session number also set it. So now you just made a 6RR gain here, right? 3RR to here, another 3RR to here. Now you made 6RR. But if you just hold it here, you made nothing. You just actually lost money. So this is actually sustainable, consistent. Over the monthly basis, I see myself having very unrealistic results. One month I'm actually down. Next month I'm up 36 RR. Next month I'm up 42% RR. Like it's very it's not an average on it. The reason I'm up like that because you can see my recent trades. They've been booming, right? 11 RR, 8.5, 13.5, 5.5. Those RRs are still feeding me, right? But like that in a longer term basis will not profit us because the problem is not the trade. It's not about having this consistent result. It's about emotions. So if I hold it here, it goes back up like fuck. Because you guys know it's an emotional thing here. We're not, as you guys know, we don't trade with the emotions, but we're human beings. We're gonna have emotional problem. If it goes over here, like, fucking hit my stop loss. Let me get out to break even. Let me break even here. And eventually, market goes back to your direction, and etc., etc. And it just fucks up. You fuck up your whole trade because of your emotion, which we don't trade a chart. Which we trade a chart in the data, not our feelings. We trade a chart in data, not our emotion. We trade a chart in the data, not our PNL. And you can see now. Since I added a 2% rule, we got out here. Although we pushed a rule, and we could have literally we just needed like what 2 more percent to pass the account. It literally fucking said valid rule, but that's me blowing up the account. I didn't even blow up the account. I just breached a rule, which I was literally up. But don't worry about the account. This shit's all cool. The problem is not that. The problem is this setup help us even more. Now we have this setup right here helped us with our complicated rules that we had. I had a fucking complicated rule on the partialing, take profits, being greedy, because whenever I have a option to go for more than what I am supposed to go for, I will be way more greedy. Right? So let's just say I'm going here. I'm taking a short. I will go all the way down here as well. right? I'll go for honest take profits, which make me greedy overall, right? And those just to will never get met and stop you out, which we want to avoid. So that was a lot of writing. I just literally just lost what I was gonna say. But the primary lesson of this is this helped us a lot. It benefited us a lot here. I'm only gonna go for a fixed 3RR. Eventually, I'm not gonna break even at all. I'm gonna let the full 3RR play out because as you guys know, our setups usually offers way more than 3RR. We're gonna go for a fixed 3RR only. We're no longer partialing anymore. We're just going for a fixed 3RR or negative 1RR. We as well are going to not risk 2% on a challenge phases because what's the problem with this on? They said I risk too much, which I risk 2%, which I like. Oh, well, okay, I'm not risking 3% per trade. I'm risking 2%, but they said because what does that with 2% per trade does is it messes up with the equity edge balance, right? So you know, if risking 2% per trade, this right over here messes up with the equity edge, which that means, you know, if you lose too much, you mess up the equity edge, where the equity edge will be higher than the, you know, actual balance, and that will just fuck up the whole, you know, setup. So if you just lose a little bit, like a couple cents, you're fucking up, you are gonna fuck up and blow up the whole account. So that's that. And yeah, you can see that's now instead of risking 2%, we risk 1.5%. So let's just say we go for a fixed 3RR. First trade, risk 1.5%. We make 4.5%. So the next trade we risk 1.5% again, and eventually we're making another 4.5. 4.5 plus 4.5 is 9RR. So we're past phase 1 with 9RR. So now this one is a KOD here. This is a kiss of death, or one shot, one kill. And eventually what we could do for phase 2 is risk 1.5% again. For the first trade, make 4.5 RR. Second trade, risk 1.5% again, but get out when the market hits that 5% gain. And this is only during the challenge phases, right? So now let's just say risk for the phase 2, we need what? A 5 RR, 5% gain. We're first triggering 4.5%, which we're up what? 4.5% right over here. Just risking 1.5% for a 3RR, we're up 4.5%, and eventually we only need 0.5% to pass the phase. All we're gonna do is risk the same amount. Doesn't matter if we lose it, it goes in a losing position. We're gonna risk 1.5% again, but right when it hits the 5% equity edge, what that means is right when this, you know, 0.5 it goes to 5% gain, we're gonna get out of the trade. No matter if there's a stake profit or not, we're gonna get out of the trade, pass it, and try to get right back in with a different account and risk the same amount and try to pass that account as well. So get out of it, get another trade in there, and eventually let that trade play out as well after getting us the past phase. So that's how I'm gonna do my challenges now. This is a little less aggressive, but it's moderate aggressive, because the one I did right over here, which I risked 2%, which I literally got a drawdown with this, and I was up 3% or 1.5% or 2% on this with a 9% gain. When I got out of this, I said I risked too much, so I need to risk like 1.5%, which is moderate. This is just for the challenge phases. For the actual account, for the, you know, for the live funded accounts, I'm gonna risk 1%. 1% alone, nothing above 1%. As well as I accept this trade over here. I accept the risk. Everything was accepted. All good here, no psychology problem. So now all we're gonna do is risk 3%. I mean, we're just gonna risk 1.5% on challenges on every trade. So we're gonna pass the account faster. So all we need now, all we're gonna have to do is get a phase 3RR. Two trades should make us pass phase 1, and one trade in a like a little push up or push down should make us pass phase 2. And yeah, so that's a one shot, one kill model as well. Then that's my new thing I'm gonna do. I'm gonna go for a fixed 3RR only, just because, you know, as I said, I've also showed you guys a graphical representation of what I mean. So if the market wants to go here, we're gonna catch a one hit trade here, catch another trade probably to the upside, constantly make 3RR to the drawn liquidity instead of just holding here, holding the whole position to the upside. Market potentially come back down, make you lose. You know, you could be up 8RR, one go back all the way down, here's your stop loss, and you make fucking nothing. You lose money, right? So that right there gives you insurance. So let's just say market's gonna go over here. Let's just say it does go there. Or let's say that's it. Let's say at this case, you just go there, you make a 3RR, another 3RR, right? Eventually, another 3RR. So now I make 9RR plus, right? If I offer you a setup, but let's say it doesn't go over there, you can take a first trade, 3RR, and eventually the other guy's still holding a trade here, trying to go over here, eventually market goes up, another 3RR. Eventually, market decides, okay, the market direction is that wrong. Market wants to just manipulate people. Eventually, goes back lower. This guy, now I made 6% gain, 6RR. Now this guy right over here made nothing and lost money. He lost about what? Fucking negative 1% or negative 2% while he was up what? Fucking probably 8RR or 8% gain there. He probably lost all that for no fucking reason here. Right? Same thing like this. This is like a fucking perfect example. This day, 3RR here could have made another 3RR right over here. Could have made eventually. If you're still holding that, you would have been his stop loss. Made nothing. Actually lost. You actually lost money rather than make money. So other than that guy, other guy made a 6RR here, but you fucking lost money, right? So would you rather do that or do the other one, or I'd rather pick the 6RR, right? So yeah, because we're gonna have trades to go up to outside. Because now I'm looking to take a trade during the PM session for the Venom model. I'm currently backtesting it. I'm taking in a small live account just to backtest it and eventually take on the challenge account or the funded account once it's ready. So yeah, I think yeah, this is a lesson, big lesson. Now this right over here helps us take away a lot of rules that is not needed. I had a partialing rule. I had a greedy rule. I had, don't want to take profit rule, which now, as you guys know, simplicity is key. So now I just made our setup simple, fixed 3RR. So whatever I'm entering must be a 3RR, and I'm taking a 3RR and go on from that. So yeah, make sure you guys like, comment, share, join the description down below, and thank you for watching. I'll see you guys later. This is a beautiful lesson. We actually got a drawdown, but the market said we just somehow breached it. But now we're gonna raise 1.5% on the challenge phases to avoid that. Breaching that rule, as well as we're going to be risking 1.5% per trade every trade on the challenge phases and risking 1% on the live account and funded account, as well as we're going to go for a fixed 3RR. Now this avoids partialing. This avoids me looking like constant the market, because when I'm entering a trade, and let's just say I have 3 take profits here, I have to constantly monitor the fucking charts to look where the market is at, right? I don't even got my glasses. I'm wondering why my fucking eyes is hurting. Like we now this is how helps to avoid that monitoring the chart constantly. Now we just put a stop loss, take profit. We're done. Now we just move on to our day without worrying where the market's gonna go. Because when I'm doing this, I gotta come here. Okay, take profit. I have to constantly monitor the chart because I don't know if my take profit gets met. And eventually, now all I gotta do is, partial. Okay, a partial market went down, so I didn't pay attention. Market go down here, a partial here, and now I just made less money. Now market goes up high, low here. Market hits it, but market goes even lower. I fucking partial over here. Now I just missed out next second partial. But this one here, like that, it makes me constantly monitor the chart. While the fixed 3RR just makes me play the trade, get out of here. That's it. I'm done. Right, with now we're just hitting a negative 1RR or a negative 3RR again, nothing else. Which that's beautiful. That's a beautiful part, because I don't want to be fucking looking at a chart. That's why I have a fucking black thing under my eyes, which that's just from looking at the screen for so fucking long. I want to avoid that by just simply enter the trade and get the fuck out of the chart. That's it. And the same thing with the other one. So I could play the chart and move on with my day without looking back in the chart. Look, okay, did I hit my break-even spot? Did I hit this? Did I hit that? Did my first take profit, etc., etc. Now I can place take profit stop loss. Come back next day. Okay, next day. Okay, hit my take profit. Okay, now let me see if I can take another trade. Okay, give me another trade. Okay, I'm gonna take this one as well and go on for my day. So yeah, that's how I'm gonna go. So thank you for watching. Very long video, which is worth it. So yeah, see you guys later. Peace out, and join the description down below, and I'll see you guys later. Beautiful trades. I know a lot of you guys took this 4.5RR gain, and as you guys know, man, our goal was down here, but you guys gotta be smart enough here. You're independent. Yes, I gave you guys a signal to short it down. Yes, you made a lot of money from this. You were up 4.5RR. Some of you guys got out here. Some of you guys send me a screenshot over here getting out. Somebody send me a screenshot getting out from here. some of the screenshot getting out from here, and I got out here from as well. I primarily execute a trade on my basis. So now once I give you the signal, now that's your choice. If you wanna get out of trade, it's your choice. If you wanna hold it, it's all your it's all your responsibility, not my responsibility. All I know, okay, I place my trade. I'm gonna get out here. I'm gonna get out whatever I want to get out. You can get out whatever you want to get out, right? Although we do want to go down here, but if I get out here, I'm gonna get out here. It's all up to you. It's your chart, your data, your trade, not my trade. I didn't take a trade for you. I took my trade. You could possibly, you know, take the same trade as me, but you're not going to be and I don't want you to take it literally get out same position as me. You can get out anytime you want because it's your trade. It's not I didn't execute it. You execute your trade. So yeah, I know a lot of you guys, most of you guys got out over here, so which is fantastic. But yeah, see you guys later. Thank you for watching. Make sure you guys like, comment, subscribe, share, and join the description down below. And I'll see you guys later. Peace out.